On November 10th, Chinese Deputy Finance Minister Zhu Guangyao said that China will raise the limits on foreign ownership in joint venture firms in the futures, securities and funds sectors from the current 49% to 51%. And the 51% limit will also be lifted after 3 years. Why has China decided to ease limits on foreign ownership of financial services groups now? China has promised to abolish the restrictions on foreign shareholding in commercial banks, which is currently between 20 and 25%. Yet most of China's banks are owned by the local or central government, which are unlikely to sell to foreign investors. How will these policies be implemented? For China's financial sector as a whole, changes should significantly improve the operating level, but will also bring uncertainties. What kind of risks will China's financial sector face in the future? The foreign financial industry is mature compared with China's market, and the entry of foreign capital may have considerable impact. How will China's market accept the challenge brought by foreign capital?
China has announced the plans to ease or eliminate investment restrictions on foreign companies in its financial markets. In the future, foreign firms will be able to become large shareholders in Chinese financial service providers. Analysts say the move is one of the most welcome for opening up financial markets in China, but it will take time to evaluate its full significance. What are these changes? How will China's financial sector evolve in the coming years, and what challenges continue to face China's financial reform? To discuss these issues and more, today I'm very happy to be joined here in the Beijing studio by Charles Liu, founder of How Capital, and Professor Paul Gillies from Guanghua School of Management at Peking University. That's our topic. This is Dialogue. I'm Yang Rui. Charles, Chinese Deputy Finance Minister Zhu Guangyao said that China will raise the limits on foreign ownership in joint venture firms in the futures, securities and fund sectors from the current 49% to 51%. Well, how significant is this major move? Are we going to have more uncertainties?
I think there are two sides to this. One is politically what it means, geopolitically too, because there's been so much complaint that China's financial sector is so restricted from foreign participation that many Western, especially U.S. institutions, have been complaining about this. But increasing it to allow it to take control over the financial institutions, whether or not this will really have a major impact is, I think, rather dubious.
And do you think this is a part of our commitment to the WTO? Years after our entry.
And also to make President Trump very happy for the trip. I think opening up the financial markets, one has to look at a couple of things. One, in the financial markets, the fundamentals are so different between China and the rest of the world that the regulatory framework is different, the ways of operations are different, even the IT systems are different. It's very, very difficult for a Western institution to come in. For example, China spent 50 times more on mobile payment last year than the United States. This is something that Western institutions are not necessarily very familiar with, but it's blossoming in China. So I think it will take some time just for the Western institutions to understand what is going on here. Another part which is important, as I worked for some time with the Western financial institution, real decisions are taken by those sitting in New York and London or Zurich. Those who are operating execution on the ground don't have final decision-making power. And to educate the board of directors and senior management of these institutions on what is going on in China is going to be a very long, drawn-out process. So I don't think major decisions will be taken politically.
No, this will be a step-by-step implementation. So, Paul, what was the immediate response from Wall Street and Bloomberg?
Well, some of the banks went up, particularly the Chinese banks and insurance companies, where they may end up becoming targets for foreign investors. You know, this has got two steps to it. The first step was to allow majority ownership by foreigners, and then 3 years later it goes to 100% ownership. And I think that's what more firms are going to be interested in. But that second phase is going to be more, I think, foreign companies acquiring small Chinese insurance companies and brokerages.
Charles, what kind of financial institutions are likely to be the first ones with more foreign capital ownership?
I think, as Paul has said, it will be small financial institutions.
Small financial institutions.
Of all
small
types, and
companies.
insurance companies especially.
Are you suggesting they should sell them?
The small Chinese financial institutions, it's a great opportunity for them to exit, for the owners to exit, because the Western firms will pay a premium. The Chinese market is supremely competitive. It's not so easy.
Let me go back to your initial concerns on our opening up the financial markets. Foreign competitors will find it very difficult to get familiar with the Chinese regulations and regulatory system. What do they have to learn before they can gain a line share in the Chinese market?
Well, what I think a lot of these firms, when they come into China, particularly when they own the whole business, is they're going to find that the Chinese regulatory system is actually pretty complex, and it's very different from what they're accustomed to elsewhere in the world. So if they come here and expect to operate the way they operate in London or New York, they're going to have a pretty rude awakening pretty fast.
Well, what can we learn from, for example, the establishment of the AIIB, which has attracted many professionals from Europe, for example, to be directors on the board, to write rules? Because Obama said we cannot let China write rules. The United States should be the one to write the rules. Now, once our overseas competitors have entered into the Chinese financial market, they find you know, they are confronted with an entirely different set of regulatory rules. So what do you think of the frustrations?
Well, I think they're going to be very frustrated because they're going to have a hard time explaining to the head office why they can't do what seems to be so clear to them what they want to do. And that will mean that many of these investments, I think, will fail from the perspective of the foreign investor just because it's too difficult to get things done. Now, they're going to have to do the same thing, and that is they're going to have to hire Chinese people who are going to know what they're doing and understand how to do this. And I think the really big winners on this whole thing will end up being lawyers and accountants in China. I think this is really a full employment act for the legal and accounting professions.
I have some lawyer and accountant friends. They must be watching our program at this moment. So, Charles, China will also eliminate the 20% ceiling on ownership of a Chinese commercial bank or asset management companies by a single foreign investors, and the 25% cap on total foreign ownership of such companies. So what will be the challenges facing China to open the banking sector?
I think the Chinese banking sector, as Paul has said, it's not just the insurance sector. Every single sector operates under very different framework from Western countries. And the banking sector is still dominated very much by the major state-owned, the big state-owned banks. I don't see any foreign institution will have the wherewithal to take 25% of Bank of China or ICBC and so on. I don't think that will happen. But the small regional banks is a possibility. One has to realize that the banking system, especially retail banking in China, is actually very, very far more advanced than a lot of the retail banks in the US or in Europe. For example, money transfers. For example, apps on your cell phones. For example, what they can do with buying and selling securities through their accounts. Of course, the banks could learn a lot, and this is something that Professor Gillis probably can contribute a lot to, is how they can improve risk management and transparency for the smaller banks. But there's also the danger that decision-making, if left to London and New York, is going to be very complicated for these banks to actually operate effectively.
In fact, when we look at what happened in the wake of China's entry into the WTO back in the year 2001, our concerns about the bankruptcy of SOE have been proved wrong. In fact, we very quickly accumulated a huge forex reserves of up to 3 trillion. That's a lot, by the way. So do you think this is going to happen to the financial sector? And do you think by opening up the financial sector, we're going to learn a lot in improving the governance? As I said in the case of AIIB, we're going to take that as an opportunity to learn from our Western competitors instead of, setting up the Chinese rules.
You know, back when China entered WTO, many of the SOEs were very concerned about introducing foreign competition. But Zhu Rongji looked at that and said, no, that's exactly what they need, because we need them to modernize and to become more competitive. And I think that's kind of what's underlying the motivation here. I think there's a perspective that the Chinese financial sector has gotten a little bit fat and lazy by having its market access controlled, and that bringing in some competition and some new risk management methods and things might actually improve the entire sector, and I think that might be true.
But 25 years on, the state-owned enterprise in China is still a stronghold that needs to be remarkably improved as liberals promote their critical voice. And they call for overhauling the SOE. So the impact upon the state-owned enterprises has been exaggerated a little bit. Do you think this is just because of the ideology or what?
Well, as it seems to be the case, the Chinese government has been very successful in balancing the SOE side and the private sector. Otherwise, how do you become, for example, manufacturing capacity in China now is the combined capacity of US, Japan, and half of Germany. So it's been successful, and it's a balance between the two, and I think it's a process. It will continue to be balanced. There is quite a bit of restructuring going on among the SOEs, including the new forms of ownership and PPP and so on.
I'm afraid what's going to happen is how the Chinese authorities will level the playing field 25 years after our entry into the WTO. So are we going to liberalize, for example, the interest rate, the forex regime? Because fundamentally, it has a lot to do with the monetary organizations, the monetary policies. Paul?
Well, I think China would like to liberalize the foreign currency regime, but it faces a real challenge with that. If you can't have a freely convertible currency and at the same time expect to control your interest rates and to control your control interest rates and at the same time also control the exchange rate. You can't have all three of those things going on at the same time.
So China's got to make a choice. What would be the safest approach to begin with
I think
among the three options?
Well, what you see is most countries have taken the decision that they need to control their monetary policy. They need to control the interest rates because that's how you stimulate or slow down the economy as you need to. And I don't think China can give up on that issue at all. Most countries then would also like to have free convertibility. So you can convert in and out of their currencies at will. In order to do that, then they have to give up controlling the exchange rate. So you have to allow the exchange rate to fluctuate widely based on the market conditions. If China were to do that, it may have suddenly a shock to the system. And if it has that shock to the system, then you would have difficulty with exports, or the cost of imports might soar suddenly because of an appreciation in the yuan. And that might, at that point, that's still unacceptable to China to take that kind of risk. And so I think the easy way out is for them to continue to control the conversion of the yuan so that they can keep control of the other issues.
Any idea of having a shock therapy will immediately be rejected by the Chinese government. Look at what the Russian Federation had done in the early days of their adopting the shock therapy. I mean, what you saw was the free fall of ruble, the Russian currency, and radical privatization of the state-owned assets meant a lot of money in the Swiss banks and in the private account. So China would never ever adopt the radical idea of a shock therapy.
I think what is happening in China today is the internationalization of RMB has actually to be separated from the outbound of RMB, because 130 million tourists spending $300 billion abroad, increasingly in RMB with Alipay and WeChat Pay, is an outbound move of RMB that ties Chinese economy and its consumers to the international market. But the internationalization of really speaking about free convertibility, I totally agree with Paul. That will not happen anytime soon because of two things. One is the fragility of the Chinese financial system to absorb, as you say, an external shock. But secondly, more importantly, is look at what happened in 1997, the financial crisis, where hedge funds, highly leveraged, can actually destroy a currency like what George Soros and his people did to Thailand, to Malaysia, and to Indonesia. And China cannot afford that risk.
So I think what will happen is China will move slowly in that direction. Today a Chinese person can take $50,000 US out in foreign currency every year. I see that going up, possibly as much as $1 million a year at some point, but they're going to want to prevent a George Soros kind of attack on the currency. And that's probably prudent at this point for China's development.
Right. So what do you think are the major issues concerning internationalization of the RMB following the listing of RMB as one of the 5 major reserve currencies in the basket of special drawing rights of IMF? What else could be done? At the same time, we see establishment of many more offshore RMB clearing centers as well as currency swap schemes in our bilateral FTA, for example.
You have the clear case where there has been gradual increase in trade settlement in RMB. That's part of internationalization. And then the unsung heroes of Chinese consumers going abroad and spending in RMB. Because when you make a WeChat payment, it's actually in RMB. Or Alipay, it's actually in RMB. So you actually have all of this moving along, and actually quite quickly. For example, Japan now has 100,000 entities which accepts Alipay, which means they accept RMB. So this internationalization process is continuing. Trade settlement is a very important factor. Increasingly, you have countries which...
Saudi Arabia, Russia, even Venezuela, Iran, Venezuela. These rogues, quote-unquote, who do not like the U.S. financial control will, of course, welcome
settlement in RMB.
Settlement with RMB in their major commodity trade, right?
That's right. And that's beginning to happen. And if we compare to what was the case 10 years ago, RMB has already become quite internationalized. But again, one has to be very careful because there are very sophisticated ways by hedge funds, by those in the financial markets in the U.S. especially, who can actually wreak havoc with your financial system, as they proved themselves in 2008 to themselves.
Right. I made a mistake. Saudi Arabia is not called a rogue state by the U.S. government. Russia and Iran are said to be the anti-U.S. axis in the Middle East. So General Secretary Xi Jinping also talked about preventing the deepening of systematic financial risks. In his report to the 19th CPC National Congress, what did he mean, Paul?
Well, one of the great systemic financial risks in China right now is really the excess of financial assets. There's so much financial assets in China, and that leads to bubbles. Bubbles like we see in real estate, which could potentially be in a bubble territory today, and bubbles we've seen in the stock market. This has been the easy access to money that has caused a lot of this, and perhaps not necessarily managing the risk as carefully as they need to manage it. And the shadow banking sector is an area of great concern, where there's just simply been too much debt extended.
I'd like to add something to that. Absolutely, I agree. And I'd just like to add, if you notice, 18th Party Congress had a sentence that was excised in the 19th Party Congress, namely that is financial innovation. After the promotion of financial innovation, you had P2P, you had shadow banking, you had all kinds of funny trust arrangements, all of which were considered financial innovation. But I think what systemic risk President Xi is referring to is what these innovation, in quotes, can do to the financial system. And now the theme is really financial stability, and to use financial services to really do what it's supposed to do, namely support the real economy, rather than looking at financial innovation in a pie-in-the-sky way.
Right. Any reform of the financial system would have to serve to improve the performance of the real economy. What's your understanding of stabilizing the financial industry and try to minimize the negative impact of financial reform in the context of innovation?
Well, I think one of the great concerns has been that the leverage has grown too high. There's too much debt.
Yes.
And that has been because the banks and others are not managing the risk, the trust companies in particular. They're willing to loan money to companies that may not be able to pay it back. And it's all been based on the assumption that the state will never allow anyone to have a bad debt. And so in effect the amounts are guaranteed. And people have obtained really high returns on cash investments in China, which encourages them to take even more risks.
According to data released by the China Banking Regulatory Commission, the total assets of foreign banks in China grew from 92.79 billion yuan to 2.93 trillion yuan from 2006 to 2016. However, the total assets of foreign banks as a percentage of the total assets of China's banking sector dropped to 1.26% in 2016 from 2.38% in 2007. Sorry for the statistics, but how do you read into this concern?
It's actually, as you have said, the money supply has increased so substantially, and asset bubbles, in financial terms, financial asset bubbles, have increasingly created a much, much bigger pool. So even though in net absolute terms, the asset of foreign banks have increased substantially, but in percentage terms, it hasn't. It's over the course of the last decade.
But you're saying now the foreign banks are having a smaller share of the pie. And I think that's in large part because they're really not that competitive. You know, the foreign banks tend to not have credit cards. They don't have all the services that are available in a Chinese bank, and they don't have the brand recognition that Chinese banks have. So it's been a tough market for foreign banks.
Oh, there's one exactly to your point. Chinese banks, if you make transfers for the local customer, it's instantaneous and it's free. But I won't name the foreign banks, but some foreign banks with branches in China still charges for cross-bank transfers.
Do you think no access to Google, Twitter, and Facebook here in China will be a major challenge for overseas competitors once they have been admitted to the financial market? Will that be a major...
But they're not in the financial market. Google, Facebook.
But they need to have emails. They need to have a regular correspondence with their headquarters back in the United States, for example.
That communication.
You know, I haven't found using financial apps in China, even for U.S. banks and brokerage firms, I've never had a problem with that, accessing that kind of thing in China.
By the end of the day, let me ask you one follow-up question as to whether the overseas inroads into the Chinese market will help cushion the impact of the systematic financial risks or the other way around.
There is a risk, I think, in terms of foreign banks coming in. If you take the good with the bad, the good, risk management, transparency, KYCs, for example. But the bad is the potential risk of innovative plays that's been executed on Wall Street that comes here, where the system is simply not built to withstand it. I think there are those risks.
What else What are the other major concerns about the internationalization of the RMB? We've addressed the issue of the free convertibility. Does it mean that we'll further open up the capital account?
It'll be a while.
That I think takes a while before you really see that happen. I think increasing use in trade settlements will make China a more important player on the world stage, particularly if China can convince certain commodity merchants to accept contracts in renminbi instead of in dollars. So many commodities like oil are priced in dollars. Now, if it could switch some of that so that some of those contracts were priced in renminbi instead, that would be a major change. I don't see that as something likely to happen soon.
That's right.
Iran agrees.
Yes.
Saudi Arabia will come to terms with the use of RMB in major settlements of the trade.
Well, China's the biggest exporter that Saudi Arabia exports to, so it's significant for them.
But bad news for Saudis was President Trump took home a big contract of up to $250 billion
in armaments.
Over 64% of that comes from energy. And that will be very bad news, devastating blow to not only Saudis but Canada. Canadians came here and discussed.
And Australians as well.
Australians?
Yeah, because one of the largest suppliers of LNG to China is Australia. Liquefied natural gas. So I think these things will gradually happen. The rolling out of RMB across the world goes the soft way, the hard way in terms of trade settlement, soft way in terms of Chinese tourist spending is very significant. Otherwise, you wouldn't find Galeries Lafayette accepting Alipay.
Yes. I see that now when I travel, the increasing acceptance of the renminbi for people who are traveling. I mean, I used a Chinese ATM card to withdraw cash in Singapore, which came right out of my renminbi account.
Increasingly, it will be a major obstacle for Chinese tourists to not be able to use online payment in European countries. But what do you think of the impact of opening up the financial sector on China's Belt and Road Initiative? Because on the one hand, we do whatever we can with the policy curbs to stop outbound flight of capital. On the other hand, the policy banks of the Chinese authorities make most of the investment in mega projects along the Belt and Road Initiative. So what do you think of impact of the
well, many of those Belt and Road projects seem to be geared towards facilitating trade. Building ports, building infrastructure to allow for the export of Chinese goods, which would enable also an increasing internationalization of the renminbi, because there's going to be goods traveling through those ports. People are buying in both directions, and to the extent those contracts can be denominated in renminbi, that'll increase the use of the yuan for that purpose.
And also, as part of that, in addition to infrastructure, there have been industrial parks built by Chinese companies all over Africa. I mean, Ethiopia, the one in Egypt is, 10 square kilometers, with one of the largest manufacturers of shoes in China setting up a facility there that hire 5,000 workers. So all of this is the outbound effort that leads to RMB, because settlement of trade with the industrial park, which are basically also duty-free zones, in many cases are in RMB.
Right. So the pledges that President Xi Jinping made in his policy speech in Davos mean that the commitments of the Chinese government would have to be backed up by the follow-up measures, such as further opening up of the capital account as well as the financial market. It's something inevitable down the road. I'll see you next time. Goodbye.